Hey there, this is Jacob Wood with Douglas Elliman Real Estate. If you're new here, this is my quarterly video summary of Douglas Elliman's Manhattan Market Report, this one for Q1 2021. Now, I found that the more I can convince the buyers and sellers I work with to pay attention to these market reports, the more confident they'll be when discerning value, when pricing homes, when making offers and negotiating. But we have to remember that closing prices are trailing data. Homes that closed last quarter went into contract 3 months before that and listed on average 3 months before that. And so it's interesting to note the difference between the story this data tells and what the market feels like on the ground right now. Now, looking at the story the data tells, we see that average closing prices were down over 9% year over year last quarter. But we see that that was driven almost entirely by new development. Completely by new development, in fact. Resales were basically flat last quarters, while new development was down dramatically. Now, the new development market was sailing into headwinds before COVID, whereas resales before COVID were actually doing pretty well. And that's for two reasons. One, if you wanted to buy a new development last year, if you wanted to buy a resale last year, last April, May, you could. But even if you wanted to buy a new development, a lot of banks weren't loaning in those buildings just in principle. If you were a developer, even if you had done everything right, you couldn't get the DOB to come sign off on your work. You couldn't get Con Edison to come turn the power on for your building so you could get your temporary certificate of occupancy. And so even if you want a new development as a buyer, it just wasn't an option for you in a lot of buildings last year. Additionally, new development buyers tend to be luxury buyers who can time the market, afford to time the market better than the resale buyers, and they believe they've done that. We've seen that even though closing prices were down 24% last quarter, that the number of closings was actually up 9% versus Q1 2020. New development buyers have perceived COVID as the bottom of that market and are beginning to come back in. In fact, I'm predicting a big rebound year for new development in Manhattan in 2021. I think resales are in store for a very active year as well. When we look at average negotiability across the entire market in Manhattan, we see that it's constricted to 4.5%. Now that's versus 7% last year when the market was just fine. 4.5% is tighter than the average negotiability over the previous 10 years. And that's how things feel on the ground in Manhattan. We're not getting a lot of cash buyers yet, although I think we will when interest rates start to rise again. We're not getting a lot of foreign buyers, although I think we will once, now that federal government policy is not as volatile as it's been since 2016. But we're also not getting a lot of bidding wars. If you're a buyer and you bid where you think the home's likely to trade, odds are the seller's going to take you up on your offer. If you're a seller, you still have to be cognizant of pricing, but if you price near where you think the home's going to sell, buyers are going to offer you your price. Brooklyn feels completely different. In Brooklyn, if you have a townhouse below $3.5 million, if you have a boutique condo resale in a building that's old enough it still has a tax abatement, it's flying off the shelf. Multiple offers after a week on market. If you call the listing agent asking for an appointment on the first day it's available, they're probably already full. The one area in Brooklyn where buyers still have some leverage is the larger, newer buildings that are high amenities with higher common charges and are new enough that they no longer have abatements. In those buildings, there's still inventory. You can still find sellers and developers negotiable in those larger Brooklyn buildings. But a little further out, smaller buildings, townhouses, it feels like 2013 when buyers felt interest rates rising, they felt prices rising, and they all wanted to get in before that happened. Depending on the type of inventory you're looking for in Brooklyn, you need to be ready to compete with other buyers. Manhattan, it's still a bit more of a civilized market. So if you like information on the specific type of home you're looking to buy or sell and how it's performing, how it feels on the ground, let's talk more. This is Jacob Wood with Douglas Elliman Real Estate.